You're tuned in to the Dakota Housing Network on SuperTalk 1270 and SuperTalk1270.com. In-depth discussion and analysis of real estate issues nationwide and those issues unique to our area. Our team of experts includes Joe Sheehan, Greg Larson, Dave Floor, Brian Ritter, and a great variety of guests. The Dakota Housing Network begins now on SuperTalk 1270 and SuperTalk1270.com.
Welcome to the Dakota Housing Network. This is Joe Sheehan with my co-host
Dave Floor, Mr. Housing right here. Yeah, well, Jim Walsh behind the board.
Hello.
Having technical difficulties here, trying to get up the Mortgage Market Guide rate update.
I can do I can do the Freddie.
Can we try to pull it up here on the landline?
No. We'll get it up here, but okay. Just so you know, so we might go a little out of order here in terms of the rate commentary this morning as we're trying to figure out those.
Well, they had the big crash yesterday.
We had the crash. Yeah, and Wall Street shut down for, was it 4 hours?
Yeah.
Yeah. Okay. And United Airlines, which affected Bismarck.
Coincidence? I think maybe not.
Yeah. What else was shut down? There was something else that broke.
Yeah.
Wall Street Journal was down.
Oh, really?
Their website went down. And there was some other one, too, that went down. So there's like 4. And then here would come out, there was an anonymous hack. Or a tweet from the group, a hacking group called Anonymous.
Okay.
It said, this was sent out on Tuesday, said tomorrow might be a bad day on Wall Street.
Oh.
So now the speculation is it might have been a hack. That'd be interesting.
Well,
okay.
Well, what I'm, we had the June, the Fed announcement. We really haven't had a chance to talk about, since the June Fed announcement, what the speculation has been regarding when the next opportunity for a rate increase will be. Yeah. But we do want to point out that last year on this show, you heard that the rates could be lower by the end of 2014.
Yes.
And where everybody said, oh, no, for sure interest rates are going to be higher, in the high 4s for sure. And on this show, you said, no. We told you we think rates could be back in the 3s, but all along the Fed has been hiking interest rates, and they were going to hike them in the first meeting, and we said
no,
and they were going to hike them in the second meeting, and we said
no, and
they were going to hike them in the third meeting, and we said
I'll say yes this time.
Did you think they were going to? Oh, the third meeting coming up. I'm sorry,
coming up. I'll say
yep, yeah. The third meeting coming up. Apologies. So we've said no. And now here we are heading into the third meeting, coming into the end of the year, and the answer's, well, they've got to raise them before the end of the year, and you're thinking this time they will.
Well, I think it's already been pre-programmed in that they're going to raise the overnight funds rate, but I think that'll be the only one this year. I don't think they'll do it again in December,
and
I don't think they'll do it once just because they've kind of said that's what they're going to do. And I don't know if the economic numbers are going to be such that it would turn around basically in 2 months here to have them say, no, we're not raising rates.
There has been some good news, but this Greece thing,
the Greece
is definitely going to start having an impact.
Good place to go on a vacation right now. Apparently,
maybe
because things are cheap.
It may not be,
but you might not want to go because you might not be safe. Yeah, okay.
Yeah. So let's go ahead and get to the what's the
Freddie Mac survey came out today. Of course, it looks at the rates from basically the week before. So it says the information sometimes is old, but 30-year fixed rate mortgage, the average was 4.04 for the week ending today. And that was down from last week when it averaged 4.08%. I think they probably got that about right because rates haven't really changed the last day here.
They had a good improvement as a result of the Greek fallout, and they've kind of been
it stayed kind of flat since. Yeah, 15-year fixed rate averaged 3.2% from last week, and it was down from last week when it averaged 3.24%. So basically, you've had about a 5 basis point change in the rates from last week, and that's about where they're sitting today.
Yeah,
so
I think if you like your payment, you better go with it.
You go with it, but if you float right now, probably not a terrible thing to do if you want to wait a little bit.
Unless Greece comes through with a solution, then you could see a quick
bump, and then depending upon what that solution is.
Well, a solution that the market's like, right?
Yeah, right. Yeah.
The seesaw pattern continues for both stocks and bonds around the globe. Bond prices are lower while stocks are surging as fears from China and Greece ease. Greece formally, so basically, folks, they're saying as the fears around Greece and China ease, interest rates are having pressure to go up.
Did you hear what China is looking at doing with their stock market? Because their stock market took a huge hit.
Plummet.
And then now yesterday it kind of recovered.
Called it a crash.
It was a crash. It was like 20%. And now, but it recovered, big recovery yesterday, I guess. But they're looking at within their stock market, they're considering whether forcing people that if you buy stock today, you couldn't sell that for like 90 days or something, or some time frame was going to be put on.
That's like
essentially, it's like if you buy this today, you're stuck with it for whatever time frame.
That would be like the uptick rule on steroids.
Yeah.
I don't know if people might not be familiar with the uptick rule. One of the things I think we could have done during the financial crisis would have been to reinstate the uptick rule. And what that did is it prevented traders. What you did is if you sold a stock short, you had to wait till it went back up again before you could short it again.
Right.
And that kept that what that does, it keeps traders from down spiraling a stock to zero, which is what happened to Lehman, which is what happened to Bears and Stearns, which is what it was meant to prevent things like that from happening. And we didn't. We never reinstated it. Still haven't reinstated it. And this would be like a version of
steroids because they're not.
Wouldn't even really matter what the price is. You just got to hold it for 90 days.
So I don't
even know what you call it. You call that the long tick rule or something. I don't know what you call that.
That would have a detrimental long-term effect on a market, I would think.
Yeah.
But anyway.
So over in China, the Shanghai Composite is sharply higher after some big moves from regulators to stop the sharp sell-off. Stocks here in the U.S. are surging after yesterday's big decline. In economic news, weekly initial jobless claims rose by 15,000 to 297, above the 276 expected, which is always bad news for interest rates when the jobs are doing good, but good news for home sales. The minutes from the June Fed meeting were released yesterday, giving off a rather dovish tone on the economy. At this point, it doesn't look like a rate hike will be seen in September or maybe not even in 2015. This from our friend from Elliot Eisenberg on oil as we go into the break here. Well, you know what? We'll come back with that. We're headed into the break here at the quarter of the hour, and we're going to come back with what Elliot has to say about the comeback of oil or when it's going to come back.
Okay.
After the break here on the Dakota Housing Network.
Currently, it's 66.
Get the traffic and weather information you need anytime on Super Talk 1270 and online at supertalk1270.com.
Okay, we're back on the Dakota Housing Network. We're doing the police today, and that was in honor of the Bismarck crime report coming out this week. Jim thought we should do the police. So we're going to get in synchronicity now.
Yes.
Okay, all right. Okay, Joe, at the break we were talking about Elliot Eisenberg.
He's got information on oil.
Well,
right.
Oil info, what do you got?
Oil has suddenly fallen from 60 to 52,
Yes,
near
it
the
did.
multi-year low of 45. Set in quarter one of 2015. This is because Iran plans to increase exports once sanctions are lifted. OPEC is increasing production. U.S. oil rig counts rose for the first time. 21. I don't know if they rose in North Dakota. Did they raise?
Yeah, I think they did tick up a little bit.
29 weeks last week. U.S. production is the highest since 1971.
Yeah.
Crude oil stockpiles are rising, and China, which accounts for 30% of global demand, is slowing. All of yesterday's afternoon's frothy gains have been erased by, so the bottom line is oil. Even though rig counts out, we're just not out of the. This looks to be like a long-term.
What it means, locally.
We got supply stockpiling. We've got, which doesn't. Yeah. It looks this price. This price may level off in this area for a while.
I think that's pretty reasonable to assume. I think locally you probably won't see rig counts going up from what I hear. Somebody can call in and tell us what's going to happen.
663-1270.
Yeah.
If you got some
663-1270. Tell us what's going to happen with oil rigs. Probably not going up, but they're going to keep pumping, so we'll still have workers out there pumping oil.
But
right?
what level? I wonder at what level we're gonna store it at though.
Yeah, that's the other question. That there's a lot in play there.
It's expensive to store it outside.
Right.
It's easier to store it under the ground, I thought.
That's a really good spot for it.
I thought it was cheap, really cheap to store it under the ground for lots of years for free.
For a couple decades anyway. It didn't cost much. Yeah.
For a few million years.
Yeah.
A few million years it's been under the ground for free.
Yeah. And
storing it up here I think costs money.
And it doesn't bust. You don't have any pipeline ruptures. It doesn't derail. You
need to insure it.
Yeah.
No lawsuits.
No insurance. Yeah. It's cheaper.
No insurance,
maybe.
No lawsuits.
We'll see.
Anyway,
okay.
But the bottom line is consider having clients lined up to lock and looking ahead. You may wish to do so before the weekend to avoid any surprise news releases from Greece, which is what we were saying in the last segment, is that if you like your payment, you're probably going to want to, if you're close to liking your payment even. Yeah. Because, good news on Greece or China could cause interest rates to bump a little bit on you versus the likelihood that they're going to get better. So,
yeah.
Bird in hand.
So Greece, there's something. They have a deadline of Saturday, I think, to come up with something, right? Mm-hmm. Which is actually almost Friday night here, I guess. I don't know what their time frame is, but and then it'll decide things. Whether the options here are they bail them out some more, or they possibly exit the European Union. Correct?
Yeah, and the question is, do they willingly leave or are they forced? They're forced. Okay. This is the problem from what I gather when I'm looking at the headline is that it seems like Greece is really split.
Yeah, well, they had the vote on Sunday.
Yeah, so their policymakers go make a deal.
Yeah.
And
no.
Yeah.
We don't want that.
And it seems like something you got to say about these you kind of almost understand this whole deal with the Spartans finally.
Yeah.
The idea, just we don't care that there's 10,000 of you. There's 300 of us.
No.
I mean, because really, I mean, the picture painted, their reality, like being restricted to, what was it?
$60. Our money, $60 a week.
So they're experiencing the daily impact.
Yeah. Yeah.
And they still look at it and go,
no.
And then basically the policymakers go cut a deal, come back to them and say, it can get worse than this. Yeah. And they still said no.
Yeah.
And so,
you imagine if something like that happened here? The government comes out and says, you can only get $60 a week out of your ATM.
And if our president said, please vote for this, we'd probably all line up and go, yeah, okay, well, I'll vote for it. I mean, there'd be very little, I don't think there would be that kind of discordance or dissonance.
Yeah.
But
what's Jim got?
Zorba.
Oh, Zorba the Greek. Okay.
Greek, yeah. I mean, I don't know whether or not to I don't know whether or not to look at them and go, you know what? That's some courage. Yeah. That's some people with some sand.
Yep.
Or do you look at them and go, that's the person they're crazy.
They're sticking their head in the sand.
Can we find them another planet?
Yeah. They either got some sand or they're sticking their head in the sand.
Which one is it?
Yeah.
Which one is it? Are they the proverbial, guy that goes bananas with the automatic gun in a McDonald's? Or are they the one who says, no, this is, or are they, don't tread on me?
Yeah.
Is it that, or which one is it? Because I mean, they really seem to be, willing to. Like I said, it's not in theory that they're being threatened. I mean, they're actually having some really real consequences.
So anyway, so anyway, folks, Greek by this weekend, we'll have more information. It might cause the markets to implode or explode. We'll see.
Right? Get some grape.
Let's. Okay. So what else? MMG say?
No, that's it.
That's it. Okay.
That's it. One of the things I had before, I know you brought in some topics, but we were talking about the Fed early on, and there's actually, if you go to graphics.wsj.com, there's actually a ranking the Fed.
Of the Fed governors.
Yep, the Fed governors.
So these are the people that vote on the interest rate.
Yep, and it has the 15 listed there.
Yep. Okay.
And it says what their accuracy is. in terms of what's going to happen.
Okay.
So I thought it might be interesting. So the current chair, Janet Yellen, overall 0.52.
Okay.
Inflation
So-
0.64.
Okay.
Labor 0.64 and growth 0.27.
Okay, so that's what she is saying. Those things will be averaging or increasing. What's the
No. That's their percentage of accuracy
on those topics?
Yep, that they considered where they're accurate, where their forecasts are more accurate than not.
Okay, so 0.52.
So she's about right half the time.
Half right. Okay, so 1 is you're right all the time, and 0 is you're never right.
Right.
Okay.
There's and she's overall.
She's the leader.
She's the best.
Oh boy. Well, she's the head of the whole thing. So
but Bernanke, it has Bernanke on here.
Okay.
Ben Bernanke overall was at 0.19.
Ooh, he was bad.
Stunk.
He was the leader.
Inflation, he was at 0.44. And labor 0.31. And at growth, he was a negative 0.17.
So he got outvoted a lot. But he put up the good front, apparently, because he went with what everybody else did.
Yeah,
voted for. Okay, all right.
Well, and now Charles, the one that's really the back of the pack, coming in at a negative 0.01 overall.
Okay.
Charles Ploser.
Okay, and now he was a guy who said he probably would have raised. He would have raised rates all the time through this whole crisis. He would have said rates should never have stayed where they were at that long.
So he had and it was on growth. It was a negative 0.85 is what really killed him.
So he was saying there wasn't going to be any growth, and there was.
But of all the 15 Fed governors that this was ranking from 2009 to 2012. So this hasn't been in the last year. So this was 2009 to 2012. Okay. Of all of them, only in that time period, only 5 had a positive accuracy rate on growth.
Oh, so they were only 5 were like above 0.
5 were ever right.
So you only had 5 that were above 0.
Yeah, that were ever right. Yeah.
Oh boy.
The rest of them were negative.
Okay.
And then only after you get past on overall, Janet is the only one who is right 50% of the time overall.
So,
it's
folks,
all
these are
down from there.
No, these are smart people. They've probably all
PhDs in economy.
Exactly, PhD economy. So that tells you
they got the best information.
They've got every lick of information they would want to look at. They could get that's available. So, and they're not getting it right. Why? Because it's all theory. What they're looking at what could happen, what they expect to happen, but it's not what actually happens in the market.
I think that how do you know Saudi Arabia is going to throw down oil production? Yeah. How do you know
that Greece is going to be restricted to $60 out of their ATM and say no?
And how do you predict how we're going to feel about it?
Right.
How do you predict how we are going to feel about in terms of like consumer sentiment when it comes out above expected. Mm-hmm. Sometimes it comes out above expected when we got the worst numbers.
Yeah, and you go, what?
How could we be feeling that good?
Yeah, yeah.
And how do you predict that? And I think that's a big piece of the puzzle is that this is a very difficult job, and that's why I think that sometimes they can have these predictions. But then I think when it comes to taking that ultimate action, it's going to be the sum zero action. Mm-hmm. And that's why even though some of them may have predicted growth, even though some of them may have predicted labor increases and they were wrong most of the time, I think that's why they kept interest rates low. I think that there's one fundamental thing that they believe, and that is that interest rates, the Fed overnight rate will impact the market.
Yeah. And
they're doing everything they can to not cause the market.
Yeah, probably. I think you're probably right. They're smart. They know that they can't predict this with 100% accuracy because of the unknowns.
They got to know they stink.
Exactly. They do. Well, they know. We're just looking at numbers. Is what they're doing. Yeah.
We're heading into the break, and we'll be back with some of Dave's topics. He's always got some good stuff. Dakota Housing Network.
Currently, it's 66.
Get the app called Radio Pup for your iPhone and take us everywhere you go. Bismarck and Mandan's own Super Talk 1270.
And we are back in the Dakota Housing Network here with Joe Sheehan.
Dave Floor?
Yeah, you betcha.
And some spirits in the material world. Okay. Joe?
Yes,
let's talk
sir.
about buying a house and
Let's
selling a house.
talk about it.
Okay, here's some stuff. We got this. This is from our Michael Higley, By the Numbers. A near record.
He knows some things.
The average sales price of existing homes sold in the United States during May 2015 was $228,700. Okay, that is just 1% less than the all-time record high of $230,200 that was set in July of 2006, right before the housing crisis. So we're back. Average home sale prices are back to really where they were pre-crisis. Now, North Dakota, if we look in the western part of the state, obviously those numbers are higher out here than the national average. That probably hasn't happened too often in the history of housing, where North Dakota numbers are higher than the national average.
Not historically. I think we've been running a little higher than average here for a little while, but.
No, from the Kiplinger letter, some other stuff on housing. They had their weekly letter, and they addressed some housing stuff here. What they expect to happen in 2015, 2016. Through 2015, they expect new home sales will gain 22% from last year. In 2016, they expect sales of new homes will rise 23%. And they look at this, well, what's making a difference? They've got two groups of buyers are making a difference. First-time purchasers of existing homes, whose presence among all buyers rose to 32% in May, up from 29% last year. And their participation rate of first-time home buyers will tick up a notch by year and then hit 35% by the end of 2016. So those are good numbers. You need first-time buyers in a market to have it be a healthy market. People with less than stellar credit are also going to help the housing market, Kiplinger expects. More of them are able to secure home mortgage loans as lenders loosen credit terms. Percentage of FHA loans given to borrowers with credit scores of less than 640 is up from 8% in 2013 to 18% today. But general lending guidelines will remain strict. No repeat of the easy-peasy lending ways prior to the recession. So really, the FHAs, their lowering of their monthly premium for an FHA insured loan, they're saying is going to help the housing market by allowing more first-time home buyers in.
We've said that all along.
Yep. Higher rents are coaxing many first-time home buyers into taking the plunge. The stronger job market and climbing incomes give people more confidence to buy. Gradually rising mortgage interest rates may also play a role. Many first-timers feel that now's the time to purchase a home to beat even higher rates down the road. We've been debating this morning already. Where are rates going to be at? Mm-hmm. I say that the Fed will maybe raise their rates in September. The Mortgage Market Guide is saying, maybe not.
Yeah, and I agree with them.
You agree with them, yeah.
I just think that there's just too much uncertainty, and I think if they, I think it's hard to say that they're going to raise the rate if they don't see inflation.
Yeah,
and we haven't, and even with the lower gas prices, we haven't seen inflation.
Right. Yeah.
And I don't know without inflation what they really base it on.
Yeah. Yeah, well, that's what I'll stick with my prediction.
You're saying that they're going to do it because they got to do it sometime, and they're almost at but you feel like that this is when they're going to feel their backs against the wall.
Yeah, and
you think September's when they feel like the backs against the wall, where
pre-program this in.
Yeah,
yeah. But if they didn't, I'm not going to be surprised if they don't. So
yeah. Right. And again, is that bad for? It could be the best thing in the world for mortgage interest rates in the short term, because if they raise it and the economy's not ready for it, mortgage rates will get better.
They will, yeah. So, okay. Let's see, what else? Kiplinger says many first-time home buyers are a bit older than their predecessors. The recently sagging job market, looming student debt loan, and other factors had led many millennials to delay marriage and home buying. That's changing now, okay? So that actually, for the housing market, might be a good thing. You've got some people with a little more experience under their belt, so to speak. might be a good thing. You're going to have people that are prepared to be homeowners. They're not just jumping in because it's a thing to do. They've actually thought about it and whatnot. Several builders in the country are moving to accommodate buyers of entry-level homes. So a lot of builders across the country are building homes in the low 200,000s. They're trying to accommodate those first-time home buyers. So those are reasons to be optimistic about the home buying.
Absolutely.
In the next 2 years. So consumer attitudes on housing. Fannie Mae did their June 2015 National Housing Survey. And the survey revealed that amid continuing strong job growth and income growth, consumers are looking more favorably on the current selling climate, perhaps showing an uptick in the existing home supply. That would be good. Good news, okay? The people are expecting higher rents, so that's, as we just said, that's maybe going to push more people into, it's time to buy. I'm paying so much in rent, I can afford to buy a house. Other results of the survey here, those that say it was a good time to buy a house, however, now this is a little bit contradictory to the headline here. The survey says those who say it is a good time to buy a house fell to 63%, tying a survey low, while those who say it is a good time to sell rose to 52%, a new survey high. Okay, so are they looking at it there? We just saw from Kiplinger that, or by the numbers, the average house price has gotten back to almost pre-crisis levels. So the cost of the house is going up. So that would show people are saying, well, it's not really a good time to buy a house because house prices are high. But if you're a seller, hey, house prices, you see that headline, house prices are back to pre-crisis levels. Oh, that's a good time to sell. And somehow they got to meet in the middle. So we'll see if that happens, I guess. And
as the case with the seller, it's both sides of it, where it's a good time to buy because house prices are still low. It's a good time to sell because I can get more for my house now finally.
Percentage of respondents who expect their personal financial situation to get worse over the next 12 months fell to 10%, tying a survey low. So that's good. That's an attitude of the consumer out there, is that they don't expect their financial situation to get worse in the next 12 months. So consequently, hey, I'm ready to make that bigger purchase. The share of respondents who say their household income is significantly higher than it was 12 months ago fell 1 percentage point to 27%. So income's kind of flat. We've talked about income, how incomes have stayed pretty flat.
More people are getting employed. Overall, incomes are not going up.
Yep, they're not going up. Yep. Okay. So overall, the survey reveals, hey, the housing market, the purchase market should get better over the next 12 months. People generally have a pretty good attitude about things. Sellers look at it as a good time to sell a house. That's going to put more homes on the market for supply. Those people are probably going to look at building a new house. So we'll see what happens. Down payment affordability. This comes from our Lending Tree. Oh, well, we'll take their survey with a grain of salt here, okay? Okay. Down payment affordability. Average U.S. down payment amount, $44,000 or 16.98% in the first quarter of 2015. That was the average U.S. down payment. Now, the reason I bring this up is they rank the states where it was most affordable to buy a house by being able to put down a low down payment, okay? North Dakota was number 4 on the list. Kentucky was number 1, Alabama number 2, West Virginia, and then North Dakota. So people can get into a house here with a lower down payment than they can anywhere other than 3 other states in the country. Good thing, bad thing? Good thing, I think.
Good thing.
Okay. People want to buy a house, they can do it.
We got a strong housing program.
Yep.
We got good incomes.
Yep.
But at the same time, our house prices are staying in that affordable range.
Yeah.
I mean, because that's a piece of it. A piece of it is where I'll promise you, if you look at some of the states where where they're getting very bad, where they're not registering well in the down payment affordability range. I'll promise you it's because house prices are outside the affordability housing. Okay. So they can't use FHA, they can't use USDA, they can't use the housing programs. There are very few houses available in the price range that qualify for the affordable housing programs like FHA, the state housing program.
Let me
and USDA.
find that here. I've got that somewhere on what
and
it costs.
that is a part of a key. Everybody wants house prices to go up.
Okay.
But do you?
Yeah. So here's
you want them to go up within reason.
Millennials have no hope of buying a home in these 13 U.S. cities. Okay.
And I promise all of them are outside of the affordable housing limits.
Yes. Okay. This actually comes from Bloomberg. Looked at this. The good news of this is that out of 50 metropolitan areas in the country, 37 are actually affordable for the typical 18 to 34-year-old. The bad news is that the areas that are most often appeal to young adults are also the ones where home ownership is the most out of reach. The calculations that Bloomberg made assume that somebody's already got 20% saved up for a down payment. Okay. Now, when you go to this, they would need, in addition to their income where they're at now, if you're in San Francisco, you'd need to make another $60,000 a year to afford the average house in San Francisco. If you are in San Jose, you'd need to make another $80,000 a year. If you're in LA, $45,000. Those are the biggies. So if you're on the West Coast, you got to make a lot of money to buy a house.
Yep.
And it's going to be tough.
It is. It's going to be tough.
There's another chart here from Housing Wire. Millennials and home buying. Of the millennials surveyed in this thing, 78% said that they do not own a home. And what else we got here? Where do they go to choose their home, answer their home ownership questions? They go to a real estate agent or a lender. That's a good thing. And internet is in there.
Fantastic. Well,
so when we come back, we can talk a little bit more about home ownership rates in the country.
If I could legally do it, I would just go out and I would name my company Google Mortgage.
Google Mortgage, yeah, that would be a good idea. All right, we'll be back on the Dakota Housing Network.
O's.
Yeah, there you go. That's how to do it.
All right. After the
Google Mortgage.
Currently, it's 72.
Sean Hannity, weekdays at 2, only on Super Talk 1270.
All right, we are back on the Dakota Housing Network. Dave Floor and
Joe Sheehan.
And we've got a message in the bottle for everybody.
That's right. The more things change, the more they
stay different.
The same.
The same. Okay. All right, Joe, you've got
one of the things that we like to do on the show is, of course, bring people's attention to. No matter how long I've been doing this business, no matter how many times I have conversations with borrowers or with the public or when I'm speaking or whatever. Same themes keep coming up. And, of course...
So these are myths? You've got some myths for us.
MSN.com, 10 home buying myths debunked. And guess what? As much as things have changed, these myths have still remained...
They just hang around and hang around.
Forever. So advice to ignore, whether it's a real estate agent, lender, or your parents, most everyone has words of wisdom. And when it comes to home buying process, but should you take their advice? People still hand out some of these myths that just aren't there.
Well, if your relative is a real estate agent or a mortgage lender, you maybe could say, "Yeah, I'll take their
advice."
Their advice, yep.
But make sure it's about their expertise.
Yeah. Otherwise, maybe not.
So a 30-year conventional loan is the only way.
It isn't?
No.
Oh, okay.
No,
there's a whole bunch of them out there.
There are still adjustable rate mortgages available.
There are
still 15 years and 10 years.
They are a good product for the right person.
People. That's absolutely right. And down payment must be 20%.
Oh, that's a big one.
Have we? We've been talking about this forever.
That's been like
we just did a whole thing about states where
it's most affordable right here in North Dakota.
There's only what? How many states that are terrible at it? There's
not. Nobody's terrible. Yeah.
Yeah. So you can, depending on the qualifying loan, the down payment can be as little as 3.5%, which that isn't even correct.
No.
So here's an article.
Rural development.
Here's an article saying everybody else is wrong. It's not correct.
It's wrong
because you can actually get deals for as little as 0 down payment if you're a veteran.
Yep.
On a VA loan, and you just said
rural development. You go out you want to buy a house out in Lincoln, you're eligible for the rural development program.
Or out in Mandan and the Rough Rider.
Yep.
I mean, there's
and then the rest of North Dakota.
Yeah, and then exactly.
Yes.
Except for Fargo, except for Fargo,
Grand Forks.
But I mean, so there.
So the article saying the myth is wrong.
To be corrected.
Yeah. Okay. We corrected it here on the Dakota Housing Network.
That's absolutely right.
All right.
The down payment is the only cost to worry about. Now, so then you get someone who does hear about a zero down mortgage, and then they get done, and then they go through it, and if they don't have a good conversation with their loan officer or they're talking with somebody online, and they don't have it, oh, by the way, you need to bring in $5,000 to closing. What do you mean I need to bring in zero down payment? No, there are other costs. Don't forget the closing costs. No, there's insurance, there's inspections, there's
appraisal.
There's other things.
Title, insurance. Yep. Okay. All right.
Forgot about buying a home, or forget about buying a home if you have debt. I've got to pay everything off. I've got to pay everything off.
You can't have any debt. No. And you have a student loan. I don't know. It depends how much your student loans are at. You don't want to pay all that off till
because they finance student loans for what, like 120 years now?
Yeah.
I mean, who's going to wait that long?
Yeah. I mean, our life expectancy is going up, but not quite at that pace.
No, we're all going to die with student loans.
Yeah. Okay.
Buying a house is better than renting.
Ooh. It could be.
Depends. Sometimes renting's better.
Yes,
sometimes
absolutely.
renting is better.
No matter what the cost of the rent or the cost of the housing, it might be the right thing for you.
It might be. If you're not going to live in that house long enough, if you're not going to, the other thing too is I've consulted with renters who they don't want the lawns. They don't want the responsibility of ownership. They don't want all the things that go along with owning. And the consequence is that they'd be better off just socking that money away and investing it. And a good financial advisor would do more for them than buying a house.
Yeah, there you go.
Now that's very rare.
Yeah,
I don't have that conversation every day.
Yeah,
but I have had that conversation.
But it's a valid conversation to have with yourself or anybody else that might be advising you.
Buying isn't in your budget.
Buying's not in your budget. Okay, are you paying rent?
Storage.
Yep.
You look so good one. Sometimes you got to look at it depending on your lifestyle. If you're a renter who stores a boat, that you could store on your property, or you got to look at all the costs.
Yeah, exactly.
You can go out, like I know our website, Cornerstone Bank. There's a rent versus buy calculator that actually you can punch in your tax bracket and everything and determine whether or not how that actually works out for you.
Okay, what's another myth?
And sorry, technical difficulties.
Oh boy, okay.
All right, I got it back though. Buying the worst house is in the best area will make you money.
The worst house in the best area. Depends on what that worst house is.
Yeah, so the owning there's a couple things that you never want to do in buying a house. You never want to have the worst house or the best house.
Yeah.
And you were using worst and best. I mean, we don't mean that way, but if you have the most modest home in the area, well, people who are going to target that area in the future want to be like most people are in that neighborhood.
Right. So if you've got if your house is in the middle of a neighborhood that's got all 3-stall garages, let's make this simple, and yours is a 1-stall,
it's going to be a problem.
If
everybody's house is a $500,000 home with granite countertops and yours is a $250,000 home with laminate, for one, people who want laminate flooring and want that price range are going to feel uncomfortable living in that neighborhood.
Yeah.
And the other thing is that the people who want to live in that neighborhood are not going to buy your house. Yeah. So and the best house too. If you own the $1 million house and you're surrounded by $400,000 houses.
Well, like they say, don't over improve your house for where your neighborhood generally.
Unless you just don't care.
Yeah, if you don't care,
if you got money to burn.
Yeah. And we've seen there's places like in rural North Dakota where people they build the house they want to build, and it costs them X amount, and they understand I probably can't sell this for that what it cost me to build it, but that's okay because that's what I want, and that's fine. Okay.
And myth: stick to the 36% rule, and you'll be fine.
So don't pay more. The
general rule, according to mortgage lenders and creditors, that your monthly house debt can go up to 36% of your income. However, the best of it, the best.
So
advice,
is it your overall debt or your house payment?
Your house payment.
Yep, okay.
So don't just follow numbers. Think about your lifestyle. Like now, if I'm somebody who likes to travel, and I spend a lot of my money outside, or if I'm somebody who I eat out every night. Let's say I'm the kind of person who I don't like to cook. I eat out every night. You're not going to want to spend to the max on your house because now all of a sudden this house poor thing and you
can't go with
your swinging lifestyle they're going to come into conflict at some point, and there's going to be pain.
And I like to go out on the river. I like a boat and all that, and what comes with that. So be honest with your lifestyle, your life choices, the things that bring quality to your life. And make sure that you're being honest. Don't just follow somebody's advice about the numbers. Yep.
Make sure you're going to have the disposable.
And the other thing is, the numbers are, buying up to 36%. If I make $40,000 is one thing, but if I make $1 million a year and I'm paying 36% of my income, it's not a big deal.
Right.
I can afford what I can afford if I'm making $1 million a year. Right. But at 40, you really got to think about that question.
Yeah, that's the other side of that coin.
The residual income after everything. That's you really have to think about that.
Yeah, absolutely. No, there is only one perfect house for you.
One perfect house? That's it?
We are looking for the perfect home.
Only one? Oh,
yeah.
no.
Again, look at your neighborhood. Look at, like my house has got this little goofy thing where you got where the door to the garage is down in the third level. It's like, it's got it's a multi-level house. Yeah. And it's quirky and it's weird and I don't like it. And every time I use that door, I don't like it.
Okay.
I don't like the fact that one night late in the dark and the garage light didn't come on too fast, that I almost drove into the stairwell going down. I don't like that.
Yeah.
But on the other hand, all I have to do is experience all the other positive things about my neighborhood, my location,
though it's the overall picture. Yeah. No, and so you have to go, if you use that door, you have to go up to your kitchen if you're bringing in groceries or something, right?
What?
Did we get a caller?
Let me see. No.
Oh. No caller. Okay.
Okay. Now all of a sudden that feels like that should be embarrassing. Did I ask if we had a caller? Nope.
Nope.
Not for us.
Crickets.
Okay.
Hey, so the last thing,
the
last one that we deal with going on, you don't need a real estate agent.
Oh, okay. Well, our friends are real estate agents here.
We are
Housing Network, and we highly recommend.
We highly recommend
a real estate agent,
especially
as a buyer.
Especially when you're a buyer, because the cost to use a real estate agent if you're a buyer is
zero.
There's advice floating around that you can manage the process entirely on your own, thereby avoiding paying part of the agent's fee or maybe even pocketing. Here's the deal. There's all kinds of disclosures and stuff in the real estate contracts and the realtor contracts that are not in for sale by owner contracts.
Exactly.
Or in self-managed transactions.
Yep.
There are all kinds of disclosures that realtors use because of the level of experience that they run into the same problems all the time.
Mm-hmm.
So they have built a system to represent that. Even attorneys, even if you had an attorney write a sales contract, it's not the same level of frequency that realtors are dealing with the transaction.
Yeah. So use a real estate agent, please.
We really believe in it. All right. Thank you for tuning in.
Next week, Brian Ritter will be here.
Oh, man, you never want to miss that.
No, Brian's great.
Talk to you later.
Okay, Joel, thanks, man.